Hello my dear students, welcome to my channel. I am Ganesh Rao, lecturer in accountancy. I am continuing the previous video in respect of accounting process in a year of business. Accounting process. Before that, concerns are two types. One is small, another is big business concern, where a limited transactions are occurred into day-to-day life of the business. Such type of business unit is called small business unit. Limited transactions are occurred. Such type of business unit is called small business unit. Whereas in case of big business unit, a number of transactions, unlimited transactions are occurred into day-to-day life of the business. Such type of business unit is called big business concern. In case of small business concern, the very first business transactions we are going to record in the first book. That book is called journal. Journal is a day book. Day-to-day transactions we are going to record in small business concern in the journal. From journal to ledger, ledger to trial balance, trial balance to final accounts. In case of small business concern, throughout the 1 year, two important books are to be maintained. That is journal and ledger. Process of entering the transaction in the journal is called journalizing. Shifting the transaction from journal to ledger, it is called posting. Journalizing and posting is a continuous process for a period of 1 year. After completion of 1 year successful, at the end of the accounting period, that is on 31st March, one statement is prepared on the basis of ledger. The statement is called trial balance. Trial balance is prepared to know the arithmetical accuracy of books of account, whether we maintain journal correct or not, whether we maintain ledger correct or not, whether we followed the rules of double entry system correct or not. That should be identified by means of preparing trial balance. On the basis of trial balance, the last step is preparation of final account. Final account gives the final result of the business, that is gross profit or gross loss, net profit or net loss, financial position of the business. The gross profit or gross loss is ascertained by means of preparing one account. That account is called trading account. Trading account is prepared to know the gross profit or gross loss of the business, and net profit or net loss is ascertained by means of preparing profit and loss account. And the last is the financial position of the business is ascertained by means of preparing one statement. The statement is called balance sheet. So balance sheet is the last step in the process of accounting. Whereas in case of what? Whereas in case of big business concern, it is not possible for us to maintain the journal, because journal is a time consuming process. To avoid that one, we are maintaining in the place of journal, subsidiary books are to be maintained. Subsidiary books are consist of 8 books: purchasers book, purchasers returns book, sales book, sales returns book, bills receivable book, bills payable book, cash book, journal proper. In the place of journal, we are maintaining 8 special journals in case of big business concern. And from subsidiary books to, it is shifted to ledger. Means throughout the 1 year we are maintaining subsidiary books and ledger. After completion of successful 1 year, that is on 31st March, We are preparing one statement. The statement is called trial balance. It is prepared to know the arithmetical accuracy of books of accounts on the basis of trial balance. The last step is preparation of final accounts. Final account gives the final result of the business. In simple, accounting is a process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the important information, that is the result of the business, is communicated to the interested parties. Now first one is what? First step in the process of accounting is identification of transaction. The first step in the process of accounting is identification of transaction, whether a transaction is recorded or not recorded, whether a transaction is financial or non-financial. If a transaction is financial, then it is going to record in the books of account. If it is a non-financial transaction, it is not at all recorded in the books of account. That too, the transactions which are measured in terms of money, the transactions which are expressed in terms of money are going to record in the books of account. And the date of transaction, the identification of date of transaction can be ascertained by means of referring the document. Purchased a machinery, on which date this machinery is purchased. We are identifying. The first step in the process of accounting is identification of what? Identification of date of transaction, on which date this machinery is purchased. That is a step number 1. Step number 2 is measuring. After purchasing the machinery, we are measuring the machinery, we are expressing the machinery in terms of money. So the next step is measuring the transaction in terms of money. After measuring, after expressing in terms of money, the next step is what? Next step is recording. Recording means entering the transaction in the journal or in subsidiary books. In case of small business concern, we are going to record the transaction in the journal, but whereas in case of big business concern, we are going to record the very first business transaction in subsidiary books. So recording in journal or recording in subsidiary books is refers to what? Is refers to recording. Next one is after that classifying. Classifying means maintenance of what? Maintenance of ledger. So maintenance of ledger, that is the classification of work will be undertaken in the ledger. That is refers to classification. Recording and maintenance of ledger is a classifying. And after that one, what is it? Summarizing. Summarizing means nothing but preparation of final account. Preparation of final account is termed as summarizing the transaction. After preparation of final account, we are analyzing the transaction. What is analyzing? Methodical classification of financial data. On the basis of this analysis, we are getting the financial information in simplest form. That is, you take example, debtors due from customers. Out of due from customers, how much of amount is good, how much of amount is bad, how much of amount is doubtful, and that too, how many dates are less than 6 months, how many dates are more than 6 months. That is, getting the information in simplest form, it refers to as analysis of transaction. After analyzing the transaction, next step is interpretation of transaction, that is explanation of meaning of significance of financial data by means of studying the two financial variable, two or more financial variable related to analysis of financial statements. We are understanding the relationship of two or more variables in the form of percentage, in the form of times, by applying a number of techniques. Example, comparative common size ratio analysis. By means of applying a number of techniques on financial statements, we are understanding the information in the form of percentage, in the form of times, and after that, after understanding, then we are communicating. What we are communicating? We are communicating the result of the business, that is the profit or loss, and the financial position of the business is communicating, informing to whom? To the interested parties. This is the accounting process in case of what? In case of small and big business unit. Thank you, my dear students.